Welcome back, everybody. Thanks for tuning in. Another live stream. You know the deal. We're gonna talk a little bit until the room is filling up, but it's only 3 minutes until the live stream of the management call will start. And in the beginning, we usually have a little bit of blah blah, an introduction, the legal stuff. But then I will shut my mouth and will just give you the commentary between Li Bin and the analysts talking. So let's hope we get some interesting stuff. Welcome back, everybody. The US is slowly getting up, I guess. If you haven't seen my other video yet, I've done a live stream earlier this morning, walking through the NIO earnings report. Yeah, why not? Let's do a little recap until more people are joining in. I would say the report has been largely in line with my personal estimations, but also with the analyst estimations out there. So that sounds pretty neutral, I guess. So I was also wondering why the stock was up in pre-market. Maybe it's got a little bit to do with what I can show here in a second. I just tweeted that one. Hope you can see that. Let me check. Today I'm traveling, so I have a little bit of a different setup. I hope it works with all of the live streaming and stuff. Let me know if the audio is bad or if there's any technical problems. Already 100 people. Awesome. That's great. Please smash a like and share this so more people can see it. As always, this is a recording, but it's also a live stream. So for people who have subscribed to this channel more than 1 year, you guys are awesome and you can comment today. That's the threshold, the barrier. And so if you're not subscribed yet, you should, so that you can comment in the future. So quick take here, because that's kind of summarizing the whole earnings situation, in my opinion, before we jump into the earnings call, and I give you a listen. Here, what we see on this chart is in blue, the quarterly deliveries, and the red line is the SG&A per vehicle. So divided by basically the sales and marketing cost and other expenses divided by the amounts of deliveries. And what you can see there in blue, the deliveries are going up, right? We know that, we get that reported all of the time. But the red line, more importantly, is going down. And even so, in the last quarter, that's meaning we're substantially selling more and more vehicles, and the line is going up, and in the background, the call is starting. But as I said in the beginning, it's just blah, blah, blah. Again, the important part here, SG&A is going down relatively against the vehicle sales, which are going up. So that's exactly the kind of decoupling that we like to see between growing sales and the cost, which have gone up more than my estimates for SG&A. But these fundamentals, in my opinion, are healthy, especially given the average sales prices have gone up again and the vehicle margin. But more on that now in the earnings call. Let me switch over. Now, given this introduction, we'll take a couple more minutes. Usually, they've got some prepared marks. In the last couple of calls, we actually seen them talking English quite interestingly. I think they're watching us. I think they're hearing our pleas and our discontent with the whole reporting stuff, and they're trying. Now, first time new CFO, will be quite interesting to see how he is acting with the analysts and so on in this earnings call. Again, so that's my recap. Actually, could be more bullish as a takeaway here, and that's maybe also what the stock is pricing in. We see a slight path towards profitability with the net losses getting smaller, despite not as much as I've personally wished for, but vehicle margins up. That's my strongest indicator for growing profitability. Hopefully more guidance in the core now today as well. And everything else pretty much in line, revenues, the cash balance, and so on. But this metric here, showing me, they're not buying sales by spending more on marketing. No, the marketing costs are actually relatively going down compared to how much they're increasing the vehicle sales. And that's before ONVO. So that's good. Now Liben takes over. Let me switch. Just a second.
Technologies, products, services, and the user community will recognize.
Please do let me know if you can hear the earnings call in the background now.
Continued to grow. NIO's delivery in Q2 reached a quarterly record of
smash a like if you can hear Liben talking.
57,373 units, up 143.9%.
Smash a like and share if you hear Liben talking
NIO
in
models
English.
had over 40% market share among all BEVs with a transaction price higher than 300,000 RMB. Since Q3, NIO's product mix has been continuously optimized. In July and August, the delivery was 20,498 and 20,176 respectively. With that, NIO's monthly delivery has been more than 200,000 for 4 consecutive months. The total delivery in Q3 is expected to be between 61,000 and 63,000 units. In terms of NIO's financial performance, with continuous cost optimization of core components and the supply chain, the vehicle margin in Q2 increased to 12.2%. As the user community became larger and more vibrant, the second quarter also witnessed rapid growth in revenues from after sales and power services. The gross margin of other sales continued to improve. Now, I would like to share with you the recent highlights of our product, R&D, and operations. On July 27, NIO hosted NIO in 2024. At the event, we introduced the full domain operating system SkyOS and the smart system Banyan 3. Moreover, we also announced the successful tape-out of Senji NS9031, our in-house developed chip for smart driving. As for NAD, NIO continued to integrate its system capabilities. In July, the industry's first AEB function based on end-to-end architecture was released. With the scenario coverage 6.7 times better than traditional AEB, it makes driving safer. At NIO In, we also introduced the NIO World Model, NVM, the brand new architecture for smart driving. NAD Arc 2 were also released. This is the most advanced end-to-end architecture based on NWM. New features and experiences of NAD Arc 2 will be released in the second half of this year. On September 19, our family-centric mass market brand ONVO is going to celebrate launch of its first model, L60. And the user delivery will start in late September. With a strong confidence in this all-round product, we will spare no effort in ramping up production and fulfilling the market demand. For sales and services, as of now, the NIO brand has 161 NIO houses and 408 NIO spaces, as well as 351 service centers and 63 delivery centers. The ONVO brand has already opened 105 stores in 55 cities, and will have over 200 stores by the end of the year. By the year end, about the charging and swapping network, so far, NIO has over 61 power swap stations worldwide, and has provided over 52 million swaps. Besides, NIO has installed over 23,000 power chargers and destination chargers. Quick and hassle-free recharging is critical for convincing ICE owners to drive EVs. On August 20th, we hosted the NIO Power Up event, where we announced the plan of Power Up counties. In the first half of 2025, NIO's charging network will become available in every county in Chinese mainland. By the end of 2025, the swapping network will become available in more than 2,300 counties in China. To better support this initiative, we also announced the Power Up Partner Plan and signed the agreement with the first partner. The continuous deployment of the charging and the swapping network will help expand the market reach of NIO and ONVO and further drive sales growth. As for market development, we are accelerating the international expansion. On August 20, NIO's UAE website went live, and in Q4, the product will be launched and delivered in UAE, while ensuring controllable investment and efficient operations. We will also actively evaluate opportunities worldwide, introducing products to more markets. In the NEV quality study released by JD Power in early June, NIO models ranked the highest in the respective segments. NIO is also the only NEV company winning top ranking for 6 consecutive years. Ever since its establishment, NIO has been committed to making itself a global benchmark of quality and providing great user experience through lifecycle quality management. As NIO has been founded for almost 10 years, with the multi-brand strategy and the international business rolled out, as well as the external change, we upgraded the company's value system in July. In the quest of blue sky coming, NIO aspires to shape a sustainable and bright future, and envisions itself as a user enterprise where innovative technology meets experience excellence. With new brands and the products being launched step by step, the fundamental tech capability and the long-term strategic planning that NIO has been developing will have a greater effect. NIO's cumulative R&D investment, sophisticated community operations, and the efficient infrastructure deployment will lead to better sales and margin. We look forward to NIO's performance in the second half. Thank you for your support. With that, I will now turn the call over to Stanley for Q2's financial details. Over to you, Stanley.
Thank you, William. Now let me go over our key financial results for the second quarter of 2024. I will refer to RMB only in my discussion today, unless otherwise stated. Our total revenue were 17.4 billion RMB, up 98.9% year-over-year and up 76.1% quarter-over-quarter. Revenues from vehicle sales were 15.7 billion RMB, representing an increase of 118.2% year-over-year and an increase of 87.1% quarter-over-quarter. The increase year-over-year was mainly attributed to higher deliveries, partially offset by a lower average selling price due to changes in product mix and user rights adjustments since June 2023. The increase quarter-over-quarter was mainly attributed to higher deliveries. Other sales were 1.8 billion RMB, representing an increase of 11.3% year-over-year and an increase of 15.6% quarter-over-quarter. The year-over-year increase was mainly due to the increase in sales of parts, accessories, and after-sales vehicle services, and provision of power solutions, which both grow with our user base and partially offset by lower sales of used cars. The increase quarter-over-quarter was mainly attributed to the increase in sales of parts, accessories, and after-sales vehicle services, provision of power solutions and other products, and the increased revenues from technical R&D services. Vehicle margin was 12.2% in this quarter, compared with 6.2% for the same period of 2023 and 9.2% for the last quarter. The year-over-year increase was mainly due to the decreased material costs and was partially offset by a lower average selling price. The quarter-over-quarter increase was mainly due to decreased material costs. Overall gross margin was 9.7%, compared with 1% in the same period of last year and 4.9% in the last quarter. R&D expenses were 3.2 billion RMB, decreased 3.8% year-over-year, and increased 12.4% quarter-over-quarter. The quarter-over-quarter increase was mainly due to the incremental design and the development costs and the increased personnel costs in R&D functions. SG&A expenses were 3.8 billion RMB, increased 31.5% year-over-year, and increased 25.4% quarter-over-quarter, which was mainly driven by higher personnel costs related to sales functions and increased sales and marketing activities. Loss from operations was 5.2 billion RMB, representing a decrease of 14.2% year-over-year and a decrease of 3.4% quarter-over-quarter. Net loss was 5 billion RMB, representing a decrease of 16.7% year-over-year and a decrease of 2.7% quarter-over-quarter. As of June 30, 2024, our company had cash and cash equivalents, restricted cash, short-term investments, and long-term time deposits in total of 41.6 billion RMB. For more information and the details of our audited second quarter 2024 financial results, please refer to our earnings press release. Now, this concludes our prepared remarks. I will turn the call over to the operator to facilitate our Q&A session. Thank you.
Thank you. If you wish to.
All right, that was smooth. We heard Li Bin and Steve talking in English. I think we see a little bit of a change in shift of the tone here, in my opinion. That's how I'm reading it. Not only that I'm talking in English, the Q&As will be likely in Chinese. However, talking a bit more about profitability metrics, in my opinion, some of which are commented here.
Questions about our new model L60, because L60 started pre-sale in mid-May, and since then, I think the model has received tens of thousands of pre-orders, which is very robust compared to all the new launches lately. But how could NIO also ensure a high conversion rate this time after the official launch on September 19? Would the company consider getting more aggressive with the official pricing given the competition? And in the meantime, what kind of supply chain preparation the team has done to avoid any potential supply disruption after the delivery starts? That's my first question. Thank you.
Thank you, Tim. L60在8月15号，我们第一辆量产车正式的量产车已经下线。我们销售的负责人这个正开着车，我看他已经开了20多天了，20，反正快20天了吧，好像是15号到现在20天。
All right, Li Bin is talking in Chinese right now. I just switched the mic. Let me know if it's better. My audio seems to be not good.
他们现在每天的直播都有昨天的直播、今天的直播都好几百万人在看。订单的情况非常的好啊，预订单的情况啊，这个。
Okay, great. Sorry, I was on the wrong mic in the beginning. Okay, again, so while Li Bin is talking in Chinese right now, I see how they talk a little bit about profitability metrics which they haven't talked about before, like the swap stations, making them a part of the sales growth, and also mentioning how the ASPs have been down in the past due to the transition, and that was actually even suppressing the weaker margin this quarter. So basically what the CFO is saying with that is, look, guys, this transition is over. In the future, our ASPs are likely to grow again. Plus, with all of the efficiencies, how we already been growing the margins this quarter. On top, we might see some future efficiencies. I'm expecting more more margin growth. I'm expecting more questions on the guidance of the weaker margins actually during this call. Let's see, they're still talking in Chinese right now, but I do like this shift in tone, a bit more aggressive towards what the investors want to hear, also in English. So yeah.
On August 15th, we have witnessed the offline of the very first mass-produced L60, and the head of sales of the ONVO brand is actually driving this very first mass-produced car, having a road trip in China, and he has been driving the car for almost 20 days while doing the broadcast on the social media. It has received a lot of attention from the public. Every day there are several millions of views of the broadcast by the members. In terms of the pre-order intake, it actually is pretty good and has surpassed our expectation. So we are quite confident with the overall competitiveness of this project. Regarding the pricing strategy, well, we launched the product in mid-May. We have announced a pre-sale price, which is 290,900 RMB. That is around 30,000 RMB cheaper than Model Y. And before the official launch of the product on September 19th, we still have some time and room for the final price adjustments and decision. But overall speaking, we will try to strike a balance between the vehicle margin and the price point of the product to find the sweet spot. In general, we will not be very aggressive as we need to realize a reasonable margin for the product. Regarding the supply chain security, our target is that by the end of this year, which is in September, we hope that we can realize a supply capacity of 10,000 units. And sometime next year, we will be able to realize a supply capacity of 20,000 units per month.
And the team. Next question.
Sure. Thank you, William, for sharing your details. My second question is about the NIO brands, the vehicles on the NIO brand. Because we noticed the monthly sales of models on the NIO brand have stabilized at the 20,000 levels in second quarter. So looking for, would there be any further upside to the vehicle sales and the gross profit margin based on our current product portfolio? If yes, could you share with us that where would be the upside to the volume and the margin of NIO branded vehicles coming from? That's my second question. Thank you.
Your question about the 未来品牌的这个毛利啊，我觉得
All right, still some Chinese reply by the CFO for the moment. So let me welcome all the 500 viewers live currently. If you tuned in later, you should watch my earnings report take, which I live streamed earlier this morning, my full take on the earnings, and which I just made a little bit of a recap. Now, this call, of course, will also be recorded, but for everybody who subscribed more than 1 year, I'll take your question in a Q&A also towards the end of the call. Now, during this analyst and NIO management ping pong, I try to my best to get you my commentary, sometimes in the chat section, but sometimes also during those Chinese phases where they are just speaking Chinese. We'll see how well the analyst questions come in this time.
The vehicle margin of the NIO brand. In the second quarter, we have achieved a vehicle margin of 12.2%. That is mainly because of the efficiency improvements on the supply side and also in the production. As in the past 4 months, we have realized the monthly delivery volume of 20,000 units, of more than 20,000 units. We also see the opportunities for further improvements, including the cost optimization of the product, as well as to improve the high margin products in the product mix from the marketing side. With that, we will keep improving the vehicle margin in the following 2 quarters of this year and expect to realize a vehicle margin of around 15% by the end of the year.
Yeah, 我补充一下，在量的方面，我们相信还是有机会可以往上走一些，但是总的来说，我们还是要平衡这个量和这个毛利的关系，所以我们希望在
Regarding this vehicle margin, in my earlier call this morning, I mentioned how this is my key indicator for profitability, and NIO has shown here a different trend than the whole industry is on. Remember, in my other video, I said like BYD and the Auto are currently struggling with the vehicle margin.
Opportunities to improve our delivery volumes month over month. Yet we will also need to strike a balance between the vehicle delivery volume and the vehicle margin. Both will increase, but it will not be in a very drastic manner for either margin or the vehicle volume, as we ultimately we pursue a very good gross profit with our product. So we need to find the sweet spot in between.
当长期来讲 ，NIO 品牌我们是 focus 在这个30万人民币。
Let's see. I think the ultimate goal for NIO vehicle margins should be in the 20% plus area. This would be great. They even guided that ONVO could even do the same. It's definitely a bit of a challenge to get there, right? You need to scale production, you need to bring down unit economy cost and have these scaling effects.
This new brand targets a premium segment priced over 300,000 RMB. As we are going to launch new products and also do facelifts and upgrades on the products, we believe that in the battery electric vehicle segment, realizing a monthly volume of around 30 to 40,000 units is a reasonable target and the volume.
所以我们如果从一个经营的规划的角度来讲，每个月4万辆的销量，25%的毛利率，这是我们长期经营目标。从 NIO brand 的角度。
So all sum up, for the NIO brand, our long-term operational target is to realize a monthly volume of 40,000 units at a vehicle margin of 25%.
当然 ，ONVO 它所在的市场规模更大，它面向的市场是800万辆以上的一个总的市场。结合我们的 bus， 我们对油车、对 PHEV、对增程、对纯电，我们相信结合我们的充换电网络都是非常有竞争力的。通过这个，我们当然相信它的。
Wow, they're getting pretty specific this earnings call. I love that because this will help the analysts and the whole Wall Street monkeys to enter the Excel sheets what they can print in the long term for discounted cash flows. So 40K monthly sales at 25% vehicle margin. That would be tough to achieve, I can tell you. But if they pull this off, wow.
Market with a total car park of more than 8 million. In that case, leveraging our battery as a service as well as our well-established charging and swapping network, we believe that ONVO's products will be competitive even against the competition with P-Hype, RAV, and other BEV models. So for ONVO products, they do have a higher potential or bigger potential for a higher sales volume month over month. And for the longer term, our operational targets for ONVO products will be 15% for more than 15% for the vehicle margin. And we believe that it's also a reasonable target.
Thank you, team.
Thank you very much, with understanding. Thanks for all the insight and looking forward to the L60 launch. Thank you.
Thank you.
Thank you. Your next question comes from Ben Wang from Deutsche Bank. Please go ahead.
Okay, thank you so much. My first question is also about the ONVO L60. You previously mentioned that this year your volume target is about 20,000 units. Given the strong order, do you still maintain such a volume target? And if you can break down by month, because we are not exactly in the end of this month, so what's the progress for, say, October, November, December? So that is my first question. And second question is about expense, SG&A expense. It seems that expense has kept increasing. What's your target for this quarterly SG&A expense? Do you have guidance for each quarter in the upcoming second half? Thank you.
fair to say that Li Bin and the CFO speak better English than this analyst by now. So that's some good development. And now regarding cost, I've just put out this chart that I showed in the beginning, and you can also see it on X if you follow me there, about the decoupling between the sales growth of NIO, which clearly seems to be organic and by this recommendation engine, and because battery swap stations play a part in marketing. And this way, they managed to grow the sales by just slightly increasing the sales and marketing activities, despite the fact that this will include also all of the discounts and incentives which they gave in the past, which they have booked but now stopped anyways. But that's a good development. So while absolutely the number is a little bit higher this quarter, and also frankly higher than my estimates, but still you need to see it per vehicle basis, it's going down.
And this is William. Regarding the ONVO L60, we will start the delivery of the product from late September, but it will take some time for us to ramp up the production and supply of a new product. So most of our deliveries this year will happen in Q4. We will start delivery from September, but not in a very significant volume. And towards the end of the year, we hope that our monthly delivery will be around 10,000 units for the month of December. In terms of the supply side, as the car is equipped with many new technologies, it will also take some time for the supply side to ramp up their production. Thank you.
第二个问题关于费用呢，我分两块来说，一块是研发费用。
Okay, I'm surprised that they give such a detailed guidance here. They are aiming to get to 10K ONVO deliveries in December this year. I had 10K ONVO sales for the whole quarter in Q4, so I'm very conservative on that. But generally, I was putting out estimations here to be low in the beginning in the short term for ONVO. Seems they also said like in September it's going to be insignificant, so don't expect like thousands of ONVO sales in the beginning. But I think this December target is already quite big, 10K. So that now talking about supply chain and so on, this needs time to ramp up. And I said it in my other live stream as well. Like they don't want to burn themselves with a messed up launch.
The second question. Regarding expenses, there are two categories. The first is R&D expenses. We will still keep the similar R&D investment pace and intensity on a quarterly basis. So roughly on the non-GAAP basis, it will be around 3 billion RMB every quarter, but there will also be fluctuations or slight differences from quarter to quarter as they are relevant to our actual R&D activities conducted. And regarding the second category, SG&A expenses, as we have mentioned that in late Q3, we will start the delivery of the L60. With that, there will be increase in our SG&A expenses. But as we ramp up the delivery volume of the product, we also think that we will keep optimizing the percentage of the SG&A expenses against the overall sales revenue from L60. Thank you.
That's interesting. They're taking the same metric as I am, like SG&A per vehicle, and trying to keep that one. So the absolute amount might go up slightly, but the important part is that they don't subsidize sales.
So my first question is also regarding ONVO L60. Just wondering at let's say 10K volume in December this year and 20K volume next year, what kind of gross margin should be reasonable for this model? Also, as we are ramping up to higher and higher volume, what is our capacity expansion plan and also CapEx plan for 2025 and maybe 2026? Should we expect CapEx to become higher versus 2024? So that's the first question. The second question is also regarding the sales marketing expense. So we had over 30% SG&A expense growth in the second quarter. Wondering, could you give more details on the sub items, which is the one that's growing the fastest? And also, is any of the sales policy recorded in the SG&A expense? So that's my second question.
Wow, should be clear to the analyst that such of these sales incentives are part of the SG&A in this case. And they're missing the point. It's not the fact that SG&A goes up 30%. They're selling a huge amount more cars while the SG&A don't go that much up. So this is the decoupling that is important in the long term towards profitability. And I think that they should hopefully appreciate that all the time. So I think, let's see, but Li Bin may now guide towards that SG&A all the time. Of course, they might be rising because the company is getting bigger and bigger and bigger. And so also marketing and sales will be bigger at some point. But we should expect that the revenue growth is growing much, much faster. And the decoupling there, this is important based on the fact that they're building out of battery swap stations, which are part of the marketing strategy. Plus, they have so much user referrals. And it would be a bad signal if the SG&A would, grow faster than the vehicle sales, because that would mean that they are either cutting not cutting, but spending much more on marketing in order to subsidize sales in a way. And the current numbers don't give that. So that should be one of the positive takeaways, in my opinion, from this earnings call. And I hope they managed to highlight that now in the reply to this analyst. We'll see. But frankly, the analyst should be able to do this job on her own. But in the end, if they are now bullish and give detailed answers, that's helping us because, the analysts can put that into their Excel models. And yeah, we'll see. I've got a feeling so far that this earnings call is going quite well.
Take your first question. Regarding L60, when its overall production volume reaches a reasonable and expected target, we believe that it will naturally realize a 15% vehicle margin. Of course, against the fierce competition, we have also reserved some room for the variable marketing of the product so that we will be more flexible in the competition. Yet, overall speaking, as the product itself is designed for efficiency and the cost, 15% vehicle margin is a reasonable target for this model. As we actually managed to realize a good balance between the technology advancement and the cost competitiveness. Regarding the capacity preparation, we are having the mid and long-term planning for our production capacity in 2025 and 26. As of now, we already have 2 factories in operation. F2 has already started to upgrade to double shifts to support the production of L60. In late September or early October, the upgrade to 2 shifts will be completed in F2. And in the meantime, we are also planning our 3rd factory, and around Q3 next year, the 3rd factory will be ready to produce the products, which means that by Q3 next year, we will have 3 factories in operation, and it will be sufficient to support our production.
所以总的来说 ，Tina， 我们不觉得这个工厂。
So let's hope the mic is better if I don't show my hands too many times. Was I hear this clearly? 15% guidance for ONVO vehicle margin in the beginning, right? And capacity-wise, I didn't give any numbers, but basically stating, look, I have 3 factories, 1 already shifting to double shift in September, but guiding towards 10K deliveries in December.
Speaking, we don't think production capacity will be a bottleneck for us, especially it will not be a long-term bottleneck for us. Here in China, the production capacity and capabilities of vehicles and parts are quite competent. Maybe some companies will face short-term disturbance in their capacity and the supply, yet for long-term, it will not be a bottleneck. Especially last year, we have obtained the independent manufacturing qualification. This has also laid a foundation for our long-term stable capacity.
Thank you. Randy.
关于这个资本性开支呢，其实我们已经根据这个公司的实际情况，在谨慎的控制我们资本性开支的投入节奏。其实在去年呢，我们已经开始在有一些项目上就是推迟或者是取消，所以总体来说呢，2024年的这个 CapEx 呢会明显低于2023年。那2025年呢，因为现在还没有一个具体的这个预算在做，但是总体。
Thanks, guys. Yeah, please hit the like and share if you appreciate these live streams, which will be available as a recording as well.
Second question. Regarding the CapEx According to the status quo of the company, we are making prudent control and the management of the pace of our investment and expenses. Especially starting last year, we have already started such management by postponing certain projects or even canceling some projects. So overall speaking, the R&D or the capex in the year of 2024 will be significantly lower than that in 2023. As for 2025, as we haven't started budgeting for the next year, we don't have a clear picture over that, but we believe that the overall expense intensity will be similar to this year. Thank you.
另外一个问题关于这
So basically, they're on the R&D and SG&A side, they're speaking now about intensity, which is also this relation between, the company is going bigger and bigger. So obviously, some expenses may grow, but the important part is that the revenues combined with better NBE margins, that they are outgrowing the growth of the cost. But generally, becoming more prudent and also more focused on cost savings and stuff. But I think they're now speaking about the SG&A in the background. I think there's no way of spending less on marketing at some point when the company is growing to, let's say, millions of annual growth, right? It sure is decoupling, like I've shown in the chart, but the absolute numbers may grow over time. That's my sense. Let's see what they reply here. I hope the mic is better now.
两个部分。
As for the increase in the SG&A expenses in Q2, it's mainly contributed to two reasons. The first is that in Q1, we delivered around 30,000 units, and in Q2, we delivered a total of more than 57,000 units. The increase of our sales volume naturally drove up the staff cost, mainly because the team size has grown and also the incentives for the sales force has increased as well. And the second reason is that in the first half of this year, we have launched our model year facelift, and many of the new products were launched in around March and April. In that case, we have also started a series of communications and marketing campaigns relevant to our model year products that has also increased the relevant expenses from Q1.
Thank you, Tina.
Thank you so much. Can I have a very quick follow-up? So in terms of ONVO store, do you have the average store rental cost versus a NIO store? And also, how many employees do you plan to deploy in an ONVO store versus that of a NIO store? Thank you.
Yeah, I think the CFO change already did help. Seems very solid so far with those a little nuance in the remarks which they're making, which I think are more on point and generally a little bit more towards what investors like to hear. Unfortunately, this investor or analyst is not, you can't expect them to give out like your actual head count stuff or numbers or stuff like that. I mean, it's her job to make this, but let's take this question instead. When do you expect them to turn profitable? I think we might have a profitable quarter in Q4 2025 and for the whole year in 2026. That's my current estimation.
Of ONVO stores, we actually require the team to open up the stores in a quick and efficient manner. So in terms of the capex as well as the rent of a single ONVO store, it is significantly lower than that of a new store. But we don't have the specific numbers for comparison as the actual expenses may be quite different depending on the locations and the type of the store. But the overall the expense is lower, significantly lower than that of NIO.
我们给那个ONVO 的门店的装修费用补充一下，就是我们给乐道门店的这个装修费用呢，其实也设置了比较严格的标准。那目前这一批店呢，每一个店的平均的装修费用实际上是不超过100万的。当然呢，后面的这个这100个店呢，其实装修的这个我们给的标准就是会更低，所以我们会充分的去立就，然后呢去提高我们的这个门店的这种投入的效率。刚刚关于说门店人员配置的这个问题呢，这个其实是根据我们的 这个锁单量和交付量的这个节奏去做的，所以我们肯定是会用最紧凑的节奏去配置我们乐道门店的销售。
And in terms of the renovation fee for each of the ONVO store, we actually have a very strict requirement. For the existing 100 ONVO stores we have just opened, for each store, the renovation fee was no more than 1 million RMB. And for the following 100 stores we are going to open by the end of the year, we will have an even more strict requirement on renovation. With that, we will be able to make full use of the existing resources and to renovate the store in a more efficient manner. In terms of the team size for each of the store, it depends on the actual number of orders and the deliveries we plan for each store in each city. But in general, we will make sure that the team is also set up in the most efficient and compact way.
非常清楚，感谢 William 和 Stanley。
Thank you, Tina.
Thank you. Your next question comes from Yuqian Ding from HSBC. Please go ahead.
Thank you, team. Yuqian here. I've got two questions. First is about autonomous driving progress, and second is about market and competition dynamics. First question, could you share the NIO NLP progress? Especially, could you break down in terms of the consumer take rate, our disengagement rate, scenario coverage, the regional expansion, these aspects. And the second question is to ask, against the backdrop of in the premium EV segment, there's a couple of new models coming, especially in the coming months to the end of the year. And also we notice the high tier city versus the low tier city, the consumer consumption is sliding in general and more so than the low tier city. So could you help us to get comfortable and a conviction on NIO and ONVO's portfolio product technology and service expansion could counter these macro headwinds and still book growth quarter-on-quarter perspective, maybe in an aspect of channel order momentum and latest consumer feedback? Thank you.
好，谢谢。
All right, while Libin is replying to this question, I would like to welcome everybody and thanks for tuning in again. I want to come back to the ONVO topics that they just discussed about how much it costs to build it out. In our Patreon community, we've done some napkin calculation, and it should be between 20 million to 40 million USD in order to build a whole 100 network here in China, and that is, I think, not this change money in terms of NIO. It's not significant. So while it's interesting to hear how they're more efficient now, which makes sense, this will not be the big cost driver. So
we also noticed the fierce competition in the area of the smart driving, yet we are also confident that NIO is among the top players in this area. Regarding NLP Plus, it is now being used by more than 300,000 users as it is now offered as a standard feature on our NT2 product. In the meantime, the cumulative knowledge driven with NLP and NLP Plus has reached or has surpassed 1.1 billion kilometers. So in terms of the user base as well as the total knowledge driven with the functionality, we are also a top player in China.
当然，这个现在整个行业的技术路线都开始收敛到端到端的模型啊，不管是从特斯拉还是中国的一些这个同行，都已经开始在上端到端的这个模型。那我们的第一个端到
So let's hope they can be a bit bullish here on the NIO Autopilot technology, which I think is in the top 3 in China, actually before Tesla in China. Globally, Tesla may have a different setup with FSD, but it's good that this analyst is asking about it because NIO is a serious player in this field, in my opinion. And if you watch NIO Tech Days or follow my coverage here, you will know how Ren Shaoxing and team are working with a different approach there and doing some significant stuff in the cities, but also with automatic swapping of battery swap stations. That being said, I hope they also ask a couple more questions about battery swap stations and the partnership opportunities, revenue opportunities for grid balancing and so on, and general the service break even for battery swap stations, because we need to stretch that a little bit more. I think this is the year in which investors should turn more bullish on the infrastructure build out, because it helps marketing, it helps future profitability and revenue streams, in my opinion, and it's bad-mouthed too often for its initial cost for building out the infrastructure. But this is what has created a big moat for NIO, in my opinion, where, of course, there's still a bit fight out there whether or not it's the right technology or not. But if you don't believe in battery swapping and you're invested in NIO, come into my comment section and arguing about that all of the time is maybe a bit, not the way to do it, in my opinion. But I know it's a bit difficult to understand all of the aspects, so I'm hoping they could have some more official opinion on the earnings calls.
Inside of the industry, many players are converging their technology solutions and the roadmap into end-to-end model, be it Tesla or other players in China. For NIO, we are also working on our end-to-end model, and we have already released our first end-to-end based feature, that is end-to-end AEB. Its performance has been significantly improved than the traditional AEB functionality, as its scenario coverage is 6.7 times better than the traditional AEB. And in the meantime, at the NIO In, we have also released our end-to-end architecture based on the NIO World model, because end-to-end is an architecture, but its foundation technology is also very important. And we are the first company to develop and announce such word model and the end-to-end architecture based on the model. We have also released the NAD Arc 2.0. So the end-to-end model will be based on the end-to-end architecture will be based on the NIO World model, or you can see that the NIO World model is developed with the end-to-end architecture solution. Overall speaking, we believe that we're still leading the block in terms of the smart driving technologies. We have already tested the latest functionality on NAD Arc 2 at the small scale, and its performance is pretty impressive. Overall speaking, with word model and end-to-end architecture, we will be able to realize quicker functionality iteration, better experience at a lower cost. In terms of the ONVO brand, its product will come with a single O-ring with pure vision technology solution. But even with that, it has realized a very good performance in the urban driving scenario. The other days, I have tested the functionality in Shanghai, and it's also pretty good. So overall speaking, we believe that, and we also saw facts that the smart driving functionalities will help users improve the safety of driving. In terms of the actual usability of the functionality, we will also keep working on that.
第二个问题就是关于市场的增长啊，当然这个我们看到这个。
Yeah, it was a quite good answer, I think. Maybe they can add a couple more metrics on that in the future. And I noticed how they start going out now, make tech days, make demonstrations, invite some key influencers to be able to get into testing programs and stuff. So it's coming. And not many people have NIO on the map, I think, when it comes to AD technologies and also AI in general. We hear always just those really lacking takes that there is no AI in China because they're not able to purchase the latest chips from NVIDIA. I think if you follow my channel, you see that this is just a wrong statement and a false narrative, and we'll just be short before we see even Huawei and others, overtaking NVIDIA in China. And there's no lack of technology in China for this sort of technology, in my opinion. So we need to take those competitors all serious, whether it's Xiaopeng, if it's NIO, if it's Li Auto, if it's Huawei. That's some pretty good stuff. So it's more like, for Tesla, they need to get the real licenses and approvals and that sort of thing. So it's a little bit more about governmental relations and yeah, that type of a setup. And I don't expect the Chinese companies to be lacking international competitors at all. That's my opinion.
Regarding your second question, we also understand the intensity of the market competition, and this is not the first time for us to face such fierce competition. Yet the NIO brand has been realizing a pretty stable market share in the premium segment for years. This is mainly because we have a diversified and rich product portfolio to offer for the premium segment. We have ET5, 5T, ES6, EC6, ET7, EC7, ES7, plus ES8. So it's a pretty wide range of a product offering that will be enough to cover many product segments. And many of these products are also leading the sales volume in their respective BEV product segments. Not to mention that for some niche products like ET5T, EC7, or EC6, in their respective segments, their volume is even higher than some of the ICE competitors. So overall speaking, we have made a quite successful product portfolio and offering strategy. Plus, we also have other advantages such as charging and swapping network, leading technologies, good product experience, service, and the user community. This has further enhanced and solidified our foothold in the premium segment. Of course, in the meantime, we also hope that more players can also come into this segment so that we can work with them together to enlarge the size of this premium segment, premium BEV segment.
Yeah, 但从整个公司来讲，我们的增长策略是非常清晰，并且非常明确的，非常清晰明确。
Yeah, I still remember how people were saying like, "Oh, NIO is doing too many models and stuff." I don't hear those comments anymore. It's very normal for premium brands to have that sort of customization and offering. And as they just mentioned, like they have been successful in bringing that into the market. If you just look at market shares and how each of those models are performing, they're not bad. And so they use sometimes these narratives to explain the difficulties, frankly, which they had for transitioning between platforms or COVID implications and so on. But in the end, it seems the company has done the right choice with the setup. Maybe ES7 or so on, some of these models can be reduced, but overall the approach is the right one. And now they're bringing out ONVO as a direct competitor in the volume segment that is fulfilling a large need and can cover a big target group. So it took some time to get there, but now we're there. And now in the future, hopefully the financials will also show that on the bottom side. So yeah, with that, there's only a couple more minutes left till we get into the end of the call, and then I'll do some of your questions, a Q&A, and give you also, again, a wrap-up of the whole earnings and this call. So stay tuned for that. And meanwhile, smash like and share and leave a comment here.
In the meantime, for the entire NIO company, we actually have a pretty clear and straightforward strategy for the continuous business growth. The first is via wider price range. From next year, we're going to have 3 brands in the market. With battery, our price range, the price range that can be covered by these 3 brands will be as wide, will be pretty wide, ranging from 140,000 all the way to 800,000 RMB. And with battery as a service, the price range will be from 100,000 to 700,000, which will be a very strong competition to the ICE costs in the respective segments. With 3 brands with a wide price range, we will be able to reach a broader market than many of our other competitors. The second approach is via our wide product range. We have 3 brands. We also have a very diversified product portfolio of each brand. In that case, we will be able to cover a pretty comprehensive product segment with clear differentiation between each brand. And the third approach is through the markets and the regional coverage. Right now, we are expanding our point of sales into the lower tier cities, especially for NIO. At the moment, most of our sales are in the first and second tier cities. So such coverage expansion is also very important. We have also announced other plans like the power county power up plan where we will expand our charging and swapping network to the counties at all levels. With that, it will help us to further enhance the reach of all three brands. Plus, we also have the business development plan for the overseas market. So overall speaking, for the long-term growth and the development, we have a clear roadmap that is via wide price range, wide product range, and also broader regional coverage.
Thank you, Yuqian.
Awesome. Thank you. Thank you.
Thank you. Your next question comes from Paul Gong from UBS. Please go ahead.
Hi, William. Thanks for taking my questions. Two questions here. The first one is regarding the flagship sedan ET9. I think it was launched to schedule for launch in Q1 next year. Is it still on schedule? And can you give some updates regarding this model in terms of the positioning, new technology adoption, as well as the target volume outlook? The second question is regarding the overseas expansion. You are going to open the store in UAE and start delivering there. Is it a signal of the change of direction as a result of the EU tariff that you are switching the direction from Europe into Middle East? Also, one of your peers has nowadays been delivering over 10% of their volume into the overseas market. Do you think this serves as a benchmark for your overseas expansion over the next 1 or 2 years? Thank you.
谢谢 Paul。第一个 ET9， 我们还是按照我们的
Yeah, still missing an analyst question regarding profitability potential and revenue potential of battery swap stations. Nobody's asking the question why we have an investor in NIO Power. That was announced in the last earnings call. And also the battery swapping as well as grid balancing opportunities for revenues, and what will be the partnerships, how will they monetize it? We're lacking these answers, but generally I feel the call is going into the right direction here. Quite straightforward answers by NIO, sometimes more in detail than I would have expected. Let's say the 10K monthly sales guidance for ONVO. And generally, I'm pleased by Lieben and the CFO talking English, pointing out some of the opportunities out there for margin improvements and so on, and giving quite strict sales targets as well. Obviously, these targets need to be fulfilled first, but I have to say now, NIO really has fulfilled some of their initial promises now recently, and is really going according to plan, at least how I'm perceiving that, and also what I have in my personal business case and my expectations towards investing. So far it's looking pretty good, to be honest. Maybe in my recap, I will talk a bit more about that. It's not on the financial side, not a blowout quarter yet, but we have to say that really the fundamentals are lining up in the right direction here with the average sales prices, the revenue growth, the margins, and some of the special KPIs that I mentioned here, like SG&A per vehicle. So that's quite good. Now a little bit more on the profitability side, a bit more of a move towards profitability, decreasing of the net losses and stuff, and also pointing out more of the profit potential. I think then we're good.
Thank you for the question. Regarding the first question on the ET9, we're still proceeding the ET9 launch preparation according to the plan, and we haven't made any changes on the SUD of this product. But in the meantime, as you know, that the ET9 is equipped with many new technologies, including steer-by-wire, fully active suspension, in-house developed chip, as well as SkyOS. So we will need to spare no efforts in making sure and preparing for the successful launch of this product next year. Regarding your second question on our international expansion, we haven't changed our direction. Yes, because of the tariff in Europe, now selling or exporting cars from China to Europe becomes more expensive. So we will focus on the existing 5 European markets that we have already started. We also know that to establish NIO, such a premium brand, in the European market will also take a longer time, and we are very patient with that. But in the meantime, it doesn't mean that we have stopped our activities there. Earlier this year, we have just opened our NIO house in Amsterdam, and we are still installing and deploying our power swap stations in Europe. So we will still keep the same plan. In terms of the market entry into UAE, as you may know that last year we have received a $3 billion strategic investment from the Abu Dhabi government, and then the market entry into UAE is part of the plan. With that, we will work with our strategic partners in UAE to offer our products and services to the local market. Starting next year, a big difference is that we not only have a new brand and products, but also products from ONVO and the Firefly, which are more suitable for the global market. With that, we will be actually more active with our international expansion. But in the meantime, we will also need to keep a good balance between our investment scale and the efficiency to make sure that we enter into the global market in a smarter and more efficient way. Thank you.
Thank you. That's quite
Thank you, Paul.
Thank you. Your next question comes from Ming-Sun Lee from Bank of America. Please go ahead.
Hello, William, Stanley. I also have two questions. So my first question is more related to the overall macro. So in your view, what is the potential growth rate for the China EV market in the next few years? Because I think recently some investors expect that the EV penetration will slow down because right now the EV penetration is already very high. So yeah, just in your view, what is the EV penetration in the next 3 years? Yeah, this is my first question. And my second question is regarding the Firefly pipeline. So right now, will you launch one or two models in 2025 for Firefly? Yeah, thank you. That's my two questions.
Okay, unfortunately, not a question on battery swapping again. Still waiting for it. Let's see. Maybe let me take Michael's comment here. Can you comment on the expected income from 24/7? I think that's 47 and other partnerships. So we haven't seen anything on of that in this quarterly report, which tells me that revenues to come, which will be high margin, are still not booked yet. There is this, I mean, they're gonna come, right? There is this potential that this 47, which is also invested by the same investors that have now taken 20% of NIO, they will be licensing NIO's tech, and therefore they will pay them loyalties and royalties, and that will be straight to the profit of NIO, and that's great, and that's a way of funding NIO without tapping into the markets. I've done a video about that, but we're still waiting for that to happen in a financial report. So currently it's not in there, but that's one of the potentials. The other point with the partnerships that you mentioned, that's exactly also what I'm waiting for, more color on the revenue potentials of these partnerships with battery swapping partners. You know, I have my guesstimates for that. For the grid balancing part, it's even much more clear. Maybe we have today also announcement about a grid company in China partnering up with NIO as well. You know, all of that is currently not tangible for the investors and especially Wall Street, who needs real numbers in order to put it into the Excel sheets. So it takes people like us to kind of make napkin cases and come up with our own ideas how much that would be worth in the future. But I think I agree, there's a big potential.
Question. If you look at the overall passenger vehicle market, in the first half of this year, it has increased by around 3.6%. For the longer term, if you look at the total PV population in China, it's as big as 20 to 30 million units. So it's already a very significant amount. Definitely, it will keep growing, but probably not at a very significant growth rate. And it's even normal for the PV segment or PV market to suffer slight decrease. But even with that, the Chinese market will still be the largest passenger vehicle market in the world. In terms of the penetration rate of the new energy vehicle, it has already surpassed 50%, and I think that it will continue to increase. and at an even faster manner. Because for the replacement of the ICE cost, be it by BEVs or PHEVs, it will be much faster once it has surpassed this 50% tipping point. We can take Norway as a reference or example. It actually grew at a 50% penetration rate at first, and then it has quickly increased to 80 and 90%. So similarly for China, I believe that in 2 to 3 years, the penetration rate of new energy vehicles among new vehicle sales will surpass 80%.
Yeah， 那这里面其实如果从一个 ICE 车的角度来讲，它这个现在开始进入到一个恶性的循环，就是因为他们只能通过降价去维持这个自己的一些 market share， 降价力度是非常大的，不管是 premium 的 brand 还是 massive market brand， 不管是这个中国的品牌还是国际。
Some more real talk in the background about the prospects of EV in general. I think we have to totally transition to EV 100%. So no plug-in hybrids, no extended range vehicles, no fuel cells stuff. There's tremendous potential also in the application of grid balancing, energy storage, that type of stuff, and EVs in general. And these cars have these smartphones on wheels, so there's also more fluctuation or the cadence between cars is also getting a little bit faster and stuff. And Libin is right to point out that the Chinese market is still the largest in the world. They can do what they want in the EU and US with tariffs and stuff, but in the end, it's the China market that will also be the decisive market for the German players, for example. And unfortunately, the US consumer will miss out on all of these great cars from China, but it is what it is. We'll see.
会显著的增长，会快速的增长，会超过我们的预计。
If we look at the ICE costs in China, actually they have entered into an unsustainable cycle or a vicious cycle because many ICE brands have to cut their prices to keep their market share, be it premium brands or mass market brands, be it brands from China or from other countries. Many of these ICE costs are having a price slashed for the sake of a market share. But as they cut prices, it also hurts the profit and interest of their dealers, hurts the image of the brands, as well as the residual value of their products. With that, it is even more difficult for them to keep a very strong market share in their segments. So the decline of their market share is even faster than it should be. For the recent years, we have already witnessed the significant decline of the market shares of Korean brands like Honda, Kia, including Ford and General Motors. And for the recent years, Japanese brands like Toyota, Honda, and Nissan are also entering the same phase. So in general, we believe that the ICE costs from these joint venture brands will face quite difficulties in the future competition. And when they lose the market shares, they normally lose market shares to other new energy vehicle brands, including brands from China and Europe. So in that regard, I believe that the penetration rate of the new energy vehicle will grow at a pretty quick pace, even faster than we expected.
第二个问题就是Firefly 2025年我们会这个 launch 会交付，我们会交付的，所以产品准备工作我们都。
It's very interesting how they talk about the competitors.
Yes, we are going to deliver the product from Firefly from 2025. We are in smooth progress with our product preparation.
Thank you, Ming.
谢谢William，谢谢。
Thank you. Your next question comes from Cheng Jing from CICC. Please go ahead.
Okay, thank you for taking my questions. I have 2 questions. The first is regard to our new operating system, SkyOS, which has been released in July. So it has shown very comprehensive and in-depth our software self-development ability. So can you just introduce us more details of what are the technical challenges we have faced and what advantages and also the improvement of our product can be brought by the new system? So this is the first question. The second is regard to the other income gross profit margin. We have seen in the second quarter, the gross profit margin has improved significantly. So how to understand its major drivers, and also what's our forecast for the trend and continuity of the margin improvement in the future. So also with our growth of our sales volume, can we see that our charging, especially charging and battery swap business, can turn to profit in the future?
Thank you so much. This was the best question so far during this whole call. Very deep questions here about SkyOS. Most analysts on this call possibly don't even know about the software. We also talked about the gross margin of the other sales, something that's very much of interest to me, and made the leap to battery swapping and profitability on revenue streams. Now, this is all what you want to have as a match ball. I hope Li-Bin and the CFO have good answers for that. Very good question.
有这样的一些这个 core， 就是这个再到上面的中间件，我们是一个非常完整的这样一个架构。我们经过4年的时间，投入2万多的人月，我们是把它很完整的做出来了。这个其实是非常不容易的。那么提升了什么？其实就是它从一个方向的角度来讲，它让车变得更加的这个更加的安全啊。那么这整个的这个系统会变更加的稳定，我们开发的效率会更高，同时我们后边迭代的这种效率。
Takes more time to answer all of these questions. We might be trading already, or the markets might be open once we finish this call. So really glad that this question still came in. I expect also the CFO to say a couple of words, but right now it's still Li-Bin. Regarding Michael's question here of Firefly separate battery stations, yeah, we might see, I think that was the first live stream this morning where I talked about the earnings report, which by the way you can still watch as a recording. I suggest you do that. I talked about CATL possibly sharing the swap standard with Firefly. I think that could happen.
Thank you for the question. Regarding SkyOS, it's the world's first full domain vehicle operating system. That is the special thing with SkyOS, which is also the difficulty or the challenge we have faced when developing the SkyOS. Because when it comes to the era of the smart electric vehicles, we cannot use the fragmented operating systems to manage the electric architecture of the car anymore. With that, we have developed the SkyOS. It comes at 3 levels. At the bottom, we have the SkyOS H, that is the hypervisor. And in the middle, we have 4 kernels for the SkyOS. And on the top, we have a SkyOS middleware. So it's a very comprehensive solution we have developed. We've used 4 years with 20,000 person months with this great work. In terms of its benefits, the SkyOS is definitely making the car safer and more secure. It also makes the system stabler, and it also helps us to realize more efficient R&D process and iteration process. It also helps us solve the problems faced by the smart electric vehicles, like huge data throughput, cross-domain fusion, and also the latency along the communications. Because we know that it's impossible to realize such benefits by simply working on the application layer adaptation. We need to do something at the foundational level, and we are very happy that we have made it happen. The SkyOS will be applied to our author brands, including NIO, ONVO, and Firefly. We can say that SkyOS is a software cornerstone for our future products and development.
关于其他业务的亏损的这个收窄呢，在今年的2季度啊，随着我们保有用户量。
Let's see the quality of the question by the analyst by the fact that she noticed that this SkyOS is actually making a difference in the Chinese industry or the industry in general. This is a remarkable step that NIO has taken. And I guess not many who are just following NIO at the side actually know about this development. So she already told us with this question that she's deeply following it, and it's a good question. Maybe if it's not even that relevant right now towards the financials, but it's getting you a sense of what this company is doing. And I agree here with Franz about the long-term aspects of what this company is achieving, how they are thinking differently about this industry, and how they are disrupting it. So that's the interesting part. That's why I'm investing in NIO and why I find this company interesting as well. Now, the next question, what the CFO is currently replying to in Chinese, is about the topic of the gross margins of other services. So also in the end, what does this result also in the financial benefits, particularly about charging and battery swapping, but also other areas where we see now gross margin improvements in this quarter. So might be also interesting what they now tell us.
Regarding the revenues or the loss on other sales in Q2, we have significantly narrowed the losses on other sales in Q2. It's mainly because of the two reasons. As in Q2, we have improved or increased our user deliveries. With that, well, actually, there are two reasons. The first is that we have improved the profitability and the efficiency of our aftermarket sales. Earlier this year, on February 20th, we have released the 2024 worry-free service policy. With the new policy, our after-sales services become more efficient and also more profitable. And secondly, we have also decoupled the lifetime free power swap from the sales of the vehicles. With that, more and more users, especially new users, have to pay for the power swap services. This has also helped us improve the revenues and the margin on the power swap related services. With that, we have significantly narrowed the losses on the other sales. And we believe that in the future, as we continue to grow the total user base and the sales volume, especially with the launch and the delivery of the ONVO products, the profitability of the other sales will also become stronger, and we look forward to the break even or even the profit from this part.
关于这个换电站的和换电业务的盈利的问题，我们第一个，如果我们单纯看
Okay, now the CFO is even talking about the battery swap stations. So curious to hear in a second what he said. But this was already very, very good reply about the gross margins, actually giving us a view that it's getting better and improving because battery swapping is now not free anymore for everybody, but also the other services like after sales and so on are getting better monetized. In my opinion, this could be a very important profitability growth driver in the future, and it's not even yet growing according to my estimates. So like that other sales could grow faster for NIO Life and services like that. But maybe at some point we get to an inflection point. So good to see though that the gross margin also went up, and this analyst noticed. Very, very good question in my opinion, and yeah, cleared the way how they answered it. It's also where it's lots of potential in the future, and again, yeah, like James said, why SkyOS and the chips, and also this long-term planning that Franz mentioned, why these are such important things about this company and the management. And now slowly they're trickling into the financials. Not yet. I think it's not really in that report yet, but you know, in the next earnings call, it might be more apparent. And then we got not only one analyst asking about that, but we might have several analysts like digging deeper on that and want to know more about that. So this can be our advantage if we understand it more deeply, because I think, I mean, obviously it's in a potential. It doesn't have to become like that, right? But if you are able to understand the company to that level, that's all what due diligence as an investor is about.
Ability of the power swap service or in general power swap stations. If we look at the single swap station, if it can offer more than 60 power swaps per day, it itself will, and in the meantime, if we charge all the power swap services at the same level for the supercharging, then the single station will become break even. And right now in China, we have more than 2,500 power swap stations, and on average, each station can complete around 30 to 40 swaps per day. So from 30 to 40 to 60, it's not a long way to go for us to make the power swap station break even. But in the meantime, we still suffer the loss on the power swap business. It's mainly because of two reasons. The first is that at the early stage, for the early adopters of the NIO products, we have offered free lifetime power swaps to many of these users, which has actually worsened the burden on the cost of the power swap stations and the power swap services. And secondly, as we roll out our business and the network, we also came to realize that the network effect of the power swap station actually has a very significant meaning to the boost of the sales volume. In that case, we are more active in installing power swap stations even ahead of the actual need. So these swap stations deployed in advance also bring additional losses or burden to the business. So in general, if we look at the power swap station itself, it's not far away from break-even and profitability. Yet, considering its actual contribution to the sales volume, we have decided to deploy many stations in advance, and this has caused the loss on the business.
Thank you. Thank you. That is very clear.
Thank you, Tanya.
Thank you. As there are no further questions now, I'd like to turn the call back over to the company for closing remarks.
Thank you again for joining us today. If you have further questions, please feel free to contact NIO's IR team through the contact information on our website. This concludes the conference call.
All right. Thanks for sticking with me for 1.5 hours. We are 5 minutes into the market open. Let me try and recap this a little bit. So I think if I can make an analogy, we're on a road to our way back home. So we know the target, we know where we're heading. And I think this couple of last months and this quarter has shown that we are clearly on our path back home. There could be things that are going wrong down the line, down the road. So we are not there yet. There's light at the end of the tunnel. But we could make mistakes. We could drive into the wall, and there could be a car accident coming in between and stuff. So we're not there yet. But I think we didn't have this visibility, let's say, a couple of months or a couple of quarters ago, where everything was still quite messy. We didn't even have the destination in the navigation planner. And so that's where we are. This means things can still go south, and in case that there will be an accident or a problem, it can be quite challenging for us to get this company to profitability and back on the road and still make it back home. It would be a challenge, but I would say that this call and this earnings report has shown that everything is lined up as a smooth, well, I shouldn't say a smooth sail, but on a ride back home, where now we have revenues going up in the right direction, actually 4 consecutive 20K plus monthly deliveries, where today now they have guided that this is not the end for NIO. Some people have doubts whether or not the capacity limit has reached, or if there's not more potential for NIO. They said, we want to grow it to 40K a month. By the way, we also want to grow the vehicle margins even more. We've seen a recovery. It's went straight to my estimations of 12%. That's what I forecasted for this quarter. We got there. So double-digit vehicle margins again means for every car sold, we actually get some money to pay the bills. It's not enough money to pay all of the bills yet. And unfortunately, especially for sales and marketing cost, we have more cost because we are growing bigger. But the good news is that this report also has shown that the cost for marketing and sales is not getting bigger in a way that we need much more money in order to sell more cars. No, it's actually going down on a vehicle basis, meaning we are selling many more cars than we're actually spending more on marketing and sales. So that's sounding very good, like organic growth, maybe a testament to the whole referral community, social success, and what I highlighted also during this earnings call, the success of battery swap stations and the battery swap model as a way of enhancing sales. That's what I mentioned today, why they are building out battery swap stations as fast currently, despite the fact that they are not profitable yet, because they saw they are having a positive network effect and impact on the sales side. And on the other hand, they told us clearly that we are now at 30 to 40 swaps per day on average on a swap station, and it needs 60 to break even on that. And they didn't even go into the potentials of the battery swap station partnerships, and also the potential of making money off grid balancing, which will even more beneficial to the margins and the potential profits of a battery swap station in the future. So I said on a couple of videos this year that investors should stop thinking about swap stations as purely a cash burn, but rather as building a moat, something that others have not or cannot copy in the future. And second, as a way of bringing awareness out there, and in the future as potential profitability streams as well. One thing we haven't heard yet about is this 4/7 deal, which is a big bonus that they will get at some point, because that will be 100% margins. You can think of that similar to those, the CO2 credits that Tesla is selling. But NIO is also selling. Most EV makers are selling if they don't have to offset their existing ICE sales, which is the case for pure ICE plays. NIO will be making money later on licenses to battery swap partners and to technology partners. And that's why also this analyst asked this very good question about the potential of SkyOS and those gross margin improvements on other sales and stuff like that. This will be the big potential of NIO in the future, which is making NIO distinct from other automakers who simply don't have this technology and have set up their business model in a different way. That's my opinion. That's how I'm interested in the company. That's why I'm covering the company, and that's why I'm personally invested in it. Of course, go and find other voices out there. There's lots of negative voices on NIO, but sometimes the stock is not the company, right? So the negativity is also because of lots of the macro factors. The whole EV industry is facing a time of challenges. Actually, the whole auto industry, if you look at the news about Volkswagen currently. And so I would say this report, despite the fact it's not a blowout quarter in showing us a huge improvement in the net losses and stuff, but still average sales prices going up, vehicle margins going up, revenues going up, gross margin went up, and they guided us very clearly on all of these metrics with the future potentials. And we've got lots of coming up with ONVO, with Firefly in the future, and hopefully a better monetization of these other sales and battery swapping and so on. So that's why I personally feel like this was a good earnings call and a report. And hopefully we can look forward to even better calls in the future based on what we've heard today. We'll see what the market has to say about that. I think now it's already even market open. Maybe let me open it here on my screen. NIO now up 7%. Yeah, I don't know. We'll see. NIO is always traded very volatile, and I have to say that I'm not counting on good news pushing stock or bad news pushing it down. It can happen either way sometimes, and it's taken some days to digest big news and also small news, to be honest, earnings in general. So for me, what counts is that it's frankly pretty much in line with my own business case. I see where it's going. It doesn't make the impression to me that management doesn't know what they're doing. The contrary is the case. I think they have outlined a long-term vision, and frankly, I think also the CFO change and some changes which they made on how they talk in this earnings call and how they talk in English and how they talk about profitability metrics and the way they talk about these network effects. I think they're learning a couple of lessons there, and they're doing quite a few changes, and that's noticeable in my opinion. Obviously, I'm not happy with where the stock price is currently, and I wish for a faster pace in profitability, and I still see lots of question marks, for example, about really, can we scale ONVO so fast that quickly, and how much will that cost us and stuff, and how much will it cannibalize maybe in NIO sales? So you get me, there are question marks around that, but my general consensus has been quite conservative in the last couple of months and quarters on these estimates, and they're being met currently. So that's good news. So yeah, I hope we see that going forward, and I really appreciate that you guys have been tuning in and following me during this difficult NIO stock trading period so far, 1.5 hours into the stream. Again, if you tune in later, I appreciate that. You can watch it as a recording, and if you should subscribe to the channel if you want to comment also live here in the future. This will be only possible for people who have been subscribed more than 1 year, and generally I really value long-term investing, long-term subscription and long-term thinking, and so I appreciate everybody of you guys going along with me that way. So please smash a like, help share this video, and if you want, you can become a channel member on YouTube, so that helps us to finance a little bit of the work that we're doing. As you know, we do run a consulting company on the side that is partly about automotive, but also other things about China and technology and so on. So I don't have every time 100% of my time to commit to YouTube, but whenever I have more time again, I will also open up my Patreon community again. So currently we have 300 investors talking daily there, and I have some special content there. So you can sign up for that in the future again, maybe. For now, it's closed because I have to distribute my time evenly. But thank you guys for watching this, and this will hopefully reward us in the future for long-term investing and seeing more clearly what's really happening under the hood. So thanks for watching. I'll end the stream here and see you in my next videos.